Buying a home for the first time can feel overwhelming, but with a clear and structured guide, you can confidently make your purchase. This guide covers everything you need to know from start to finish. Before beginning your home search, it's essential to assess your financial capability. Check your credit minimum score for FHA, typically 580. Minimum score for conventional loan, usually 620 to 640. Request your free credit report at annualcreditreport.com. Calculate your debt-to-income (DTI) ratio. Add up your monthly debts like loans and credit cards. Divide by your gross monthly income. Ideally, your DTI should be below 43%. Pre-qualification. An informal evaluation of how much you might be able to borrow based on basic information provided to a lender. Pre-approval. A formal, thorough evaluation by a lender verifying your credit and income. Required documents for pre-approval: tax returns for the last 2 years. Proof of income like W-2 or 1099 forms for the last 2 years. Recent bank statements from the last 2 months. Valid identification such as a driver's license or passport, and information on your current debts. FHA loans, low down payment with a minimum of 3.5%, less strict credit score requirements, and mandatory mortgage insurance premium or MIP. Specific FHA loan types: FHA 203B, which is a standard purchase loan, FHA 203K, a loan for repairs and renovations, and FHA Streamline Refinance, a simplified refinance without a full appraisal. Alright, let's talk about the pros and cons of FHA loans. First, the advantages. FHA loans offer flexible requirements and a low down payment. Now, on to the disadvantages. One major con is that mortgage insurance premium, or MIP, is required for the life of the loan. Moving on to conventional loans. These typically require a down payment of 5 to 20% and higher credit scores. If your down payment is under 20%, private mortgage insurance or PMI will be required. As for the pros and cons, a big advantage is the option to eliminate PMI eventually. On the downside, conventional loans have stricter credit requirements. So, how can you avoid or reduce PMI or private mortgage insurance? One strategy is to consider a piggyback loan, also known as an 80-10-10, where you use a second small loan to reach a 20% down payment. Another approach is to make a 20% down payment up front. And you can always request PMI cancellation when your loan balance reaches 78 to 80% of the home's original value. Closing costs include additional expenses aside from your down payment. Appraisal fees, title insurance costs, legal fees, property inspections, prepaid taxes, and prepaid homeowner's insurance. The importance of a home inspection can't be overstated. Never skip a professional home inspection. It helps detect structural issues or costly repairs, and allows negotiation for repairs or final price adjustments. A loan estimate, or LE, is provided early in the process within 3 days of your loan application. The closing disclosure, or CD, is provided at least 3 days before closing, detailing final costs. Carefully review both to ensure there are no significant discrepancies. Grants and assistance programs. Look for grants and forgivable loans available at the local level, like your county or city. There are also options at the state level, such as New Jersey's NJHMFA program, and don't forget about federal-level opportunities like forgivable loans and grants through HUD. Using gifts for down payments. FHA loans allow gifted funds for down payments if properly documented. Conventional loans also permit gifts under certain conditions. Buying with an ITN, or Individual Taxpayer Identification Number. Special mortgage options exist for buyers with ITNs in the U.S. It's important to seek lenders specialized in these programs. Escrow accounts. An escrow account sets aside monthly funds for taxes and insurance. It protects buyers from large annual payments, facilitating easier budgeting. Taking advantage of a recession to buy. Interest rates often decrease during recessions, and home prices might adjust downward. Opportunities may arise in foreclosures or short sales. Evaluate job and income stability carefully before buying in a recession. Final tips. Always compare at least 3 mortgage offers. Choose an experienced real estate agent. Read and understand all documents before signing and clarify any questions beforehand. With this guide, you'll be ready to confidently take your first step toward homeownership.